Welcome back to the MarketVector weekly recap. So the theme this week is risk is back on. So let's start with the macro backdrop. US producer prices cooled off from 3.3% to 2.6%, reversing last month's tariff-driven spike. The CPI year over year came in exactly on target, while month over month peaked a little higher. But the biggest story, I think, is the US Bureau of Labor Statistics revised the payroll growth sharply lower, nearly 1 million fewer jobs than previously reported. And for the Fed, this is a credibility challenge. Policy is supposed to be data dependent, but if data are flawed, that raises risk premia, and markets now expect a rate cut next week. I think 25 basis points are almost certain, 50 still on the table. Yeah, so either way, the easing cycle is underway. Now, I always start the charts with stocks, with equities, because I think they are a risk proxy and important for crypto. So as you can see, equities remain strong. The S&P 500, NASDAQ, Dow, they all hit or are at new highs. Even Japan is at new highs, but here in this chart, you see that Chinese tech is also breaking out of multi-year ranges, which of course is a risk on indication, but not only Chinese tech. So you see here that, for example, small caps, that's the Russell 2000 versus the S&P 500 ratio. So whenever the ratio is going up, that means that small caps are outperforming. You see that we are here in a bottoming phase. Small caps outperform large caps in early easing cycles. So I would say watch this rotation. And also important are the crypto stocks. Yeah, so here we have the DApp ETF, the WANAC Digital Transformation, which consists of the miners, Coinbase, Galaxy, Circle, and other crypto-related stocks. So you see they tested the support here and now are above on strong volume. So that's definitely also an encouraging sign. Now, when we come to digital assets and we look at our crypto sectors, you see the higher beta sectors outperform Bitcoin. Bitcoin was over the last 7 days plus 4%. Infrastructure application, which is the AI theme, but also the compute theme. For example, we have WorldCoin here. They got their own treasury companies, had a very strong performance, this sector, with almost 20%. But also when you see meme coins outperforming, that's a classic high beta cycle. And also our top 100 equal weight index, which is an indication for the overall crypto market, had a quite good performance with over 8%. So you see, that's not a bear market we are in. Also, if you look at our all-season index, you see that over the last 90 days, altcoins outperformed Bitcoin. So that's based on our top 100 index. As you see, it's here at 65, but of course, it can get a lot higher here. So you can say that we have now a broader rotation into the altcoins, and we have to watch that. Also, not a surprise is our Coin 50 index. It tested the support here around the 500 mark level and is now increasing again. And this is a proxy, a blue chip proxy for the crypto market. So no signs of worrying here. And that's also confirmed by the Ethereum Bitcoin ratio. You see we had a small full flag consolidation here. And that's one point. The first step for an altcoin rally is Ethereum has to outperform Bitcoin. And if we look a step further, you see that also Solana is now outperforming Ethereum again, and going to the next resistance level here at 0.05. So maybe we consolidate here again, but that's the next step. Yeah, starts with ETH, then you go to the large cap altcoin token before you go to the smaller caps. So it seems that this playbook is really playing out. Also, stablecoin dominance is drifting lower. That's another classic alt season signal, right? So to recap, the macro setup is easing, equities are strong, alt beta is broadening, and institutions should be preparing for a full risk on phase in coming weeks. Thanks for watching. Make sure to follow for the next week's update, where we will then cover the Fed's decision and its impact across markets. Also, you can see all the sector indexes I showed you on our website, also the Coin 50 at marketvector.com. Thank you very much for watching.